Healthcare is too expensive. Employers are offsetting costs onto their employees. Who will make health benefits affordable for hardworking Americans and their families? You will. This is the Empowering Plans Podcast, a show dedicated to helping you once again emphasize the benefit in benefit plan. Now prepare to learn, plan, save, and protect with the Phia Group.
Hello, and welcome to another episode of Empowering Plans with the Phia Group, in particular, the Book of Russo podcast. I am the host, the co-founder, and CEO of the Phia Group, Adam V. Russo, Esquire, the CEO here at Phia. We've been around for 22 plus years, and I am so excited about today's show for a lot of reasons. As you know, folks, I only want to bring in the smartest, best-looking, most innovative people in the industry. I have yet to hit the trifecta, but I'm getting pretty close with my next guest. Folks, today with me, I have the president and CEO of the Self-Insurance Institute of America, better known as SIIA, Mike Ferguson. Say hello, Mike.
Hey, Adam. I guess I've made the big time here, so all good.
Dude, you've already been in the big time. This is just bigger time. It's like you went from an 80,000 seat stadium to 100,000 seats. That's the only difference. You've already been the biggest and the baddest. And folks, just to let me know, Mike has led the country's largest trade association that represents the business interests of companies involved in the self-insurance and captive insurance marketplace for how many years now, my friend?
Well, I've been with the organization for about 27 years, I think, or 28. I'm not 100% sure. I have to go back in the archives, but then serving as president CEO for about the last 10 years. So it's been a good run.
Over 10 years. And folks, just so everyone knows, I have known Mike for over 22 years. And here's how I know that for a fact. I wasn't even working for Phia. I was actually working at my old job, and I was at a SIIA conference, and I met Mike. He doesn't even remember me because I was just one of those guys in a booth. I was 23 or 24 years old, just trying to get to know one of the SIIA people. So Mike, I know you don't remember that, but that's how many years you've been around. That's how long I've been around, and that's how long we've known each other. So just want to bring up a couple of things. Mike, you currently, like you said, for the past 10 years, have been the head honcho at SIIA. You just finished your most recent conference, I think earlier this week. Tell us, how was the conference this year in 2022? I know you had it out in Scottsdale. How was the attendance? How was the feedback? How are the speakers, the topics? Just whatever you want to share about the conference that just happened this week.
Yeah, just kind of catching up today after traveling back yesterday. And listen, we're very pleased. I think it was a great event. We haven't got the final numbers yet, but looks like it's going to be north of 1,900. So it may be an all-time high. We may go back and check some historical documents, but it was very well attended. There was a lot of energy out there. It seemed like there were people everywhere, whether in the session rooms, exhibit hall, just doing meetings. I like to say everyone was doing their thing. We were, of course, happy to be back at the JW Marriott Desert Ridge Resort in Phoenix, which historically has been, I think, probably our favorite member event. We were supposed to be last there in 2020, and then, of course, got wiped out with the COVID situation. So back this year, and, of course, always great weather there. And we're pleased that we've inked a 3-year deal to be there for the next few years. So again, a lot of positive things, few things that, we're going to work on to take it up to the next level next year, but very, very pleased.
So Mike, I love to tell people the fact that I used to be on the board of directors at SIIA. And then I was honored to be the chair of the board, and my board term ended right before COVID hit. I mean, I couldn't have picked a better time to leave, right? My timing could have been better. But what did that do to SIIA? From an organizational standpoint, I mean, obviously SIIA was doing well beforehand. I would like to pat myself on the back and say it's all because of me, but it obviously is all because of your leadership. But what did that do to SIIA? I mean, you made it through, right? And this year, like you said, you think it's the highest attended event ever. But were there points over the past 2 years during the COVID period where you felt this might be over? Like, what do we do? I mean, anything you want to share about that entire 2+ year experience?
Yeah, I will. Basically, you finished up your term right before the COVID craziness. And then now you're coming back on the board as the Diamond member representative after all the COVID craziness is over. So you took a nice little hiatus during the interesting times, as I think about. So good timing on your part. But in terms of just adapting, it was certainly kind of, I like to say, at least at the beginning times, sort of a near-death experience, right? When everything started coming down and everything cratered right literally a week before we were going to have our spring forum in 2020, literally we were just days away from starting the event and everything kind of just fell apart. And not living through that scenario before, it was interesting for the first, I don't know exactly, but probably for at least the first month, we were kind of just scratching our stomachs and thinking, okay, the thought was hopefully that this is going to be just what they say, 5 days to stop the spread or whatever. And we thought, well, it's okay, maybe a few weeks or a month, and then we'll be back in business. And then it became clear that that was not the case. So we sort of figured out, okay, well, I guess this is the circumstances. These are the cards that we have. We're going to have to adapt to that. So we adapted, like a lot of other organizations, we created a whole sort of virtual menu of participation opportunities, enhanced webinars, even networking events that were virtual, and try to lean in that the best we can. And, I think we did it reasonably successful and kept the members engaged. There was certainly a time where we didn't have a lot of new members coming into the association just because everyone was kind of wait and see. But what I was super pleased about is of our membership base, we had a very low attrition rate during that time period. everyone kind of stuck with us for the most part.
Key, right? I think, and a lot of that is loyalty, right? I mean, our industry is a close industry, a loyal industry. And I think a big part of that is because of you, right? At Phia, we were just like, we hope our clients stick by us. So, we're doing the same when it comes to others, right? So as it comes to you, but on those few days, right, that week before, I mean, how many phone calls were you guys getting? I mean, clearly you didn't have enough people internally to handle every call live. I mean, I can't even imagine what the voicemail box must have been looked like, what the email chains must have looked like. I mean, every single person that would have went to that conference must have reached out to you guys in some fashion.
Well, it just became a situation where it was sort of interesting where, we were 3 days before the conference started, or maybe 4, and we still had, 550 registrants. And then it went from 550 down to like 200 in a matter of 72 hours. It was just kind of one led to the other, it was just sort of a downward spiral, which,
and then people talk.
At the time there were, the event was in Charleston, South Carolina, and in South Carolina, there were 6 cases of COVID as of the date of the conference. When you're looking at it, in hindsight, you kind of have some perspective, but in real time, it was like, this is kind of crazy, not knowing what was on the horizon. So yeah, everything was very fast moving.
And now, obviously, 1,900 plus people this year. So obviously, things have turned around. So getting back to then and now, in those 27 years you mentioned, which is amazing if you think about it, right? It's like half your lifetime.
Yeah.
When you think about that, what's the biggest difference between SIIA then? I'm not talking about conference-wise, just in general. What's the biggest differentiator between what SIIA looked like 20 plus years ago versus what SIIA looks like today? And then obviously I'm going to follow up with that. What do you think SIIA looks like 5, 10, 15, 20 years from now?
Yeah, well, I would say probably the biggest thing is, that the marketplace of just the composition of members was different. Back then, I don't know exactly, but I think I remember correctly, there was probably 600 TPAs in the marketplace. And
you said 600?
Yeah. Okay. If you can believe that. And then there was a ton of MGUs, not sure what the number there, and there were some care management or cost containment firms, but not like there is today. So the change now today, and also there were very few broker advisors that were active in the self-insurance marketplace, particularly like 20 years ago, almost none, maybe just a handful. So as things have evolved, there's been, as you know, Adam, a lot of consolidation in the marketplace. So you have, a lot fewer TPAs, although larger ones now. There's a lot of just smaller entrepreneurial companies that started, 20 years ago. And then we saw the consolidation, same with the MGU marketplace. So the raw numbers have certainly shrunk, although the individual companies in many cases have gotten bigger. And then, there's a whole constellation now of companies that provide, specialty services for self-insured health plans that have come onto the market, certainly in the last 5, 6, 7 years, many in the technology space.
I was going to say technology. That's the
they're doing really interesting things. I know at Phia, certainly you're doing services for clients that you probably didn't anticipate, maybe as recently as 5 years ago, certainly 10 years ago. So I think the biggest thing is you're seeing more entrepreneurial involvement in our marketplace from more directions. So more solutions to help those clients.
So just to give our listeners some context, you're talking about 600 plus TPAs, at least close to 100 MGU/carriers, So that's
Hmm.
700 right there. Basically, no brokers, very little when it comes to cost containment. And I know that because I started going 25 years ago. And I can tell you that you were right. As a vendor, I almost felt as an outcast at a SIIA event versus today, that 600 has got to be at least a third of that now, even less, right?
I think a
As
third
it
would
relates
be
to the
generous.
TPA
I mean,
market.
you may know better than I do, but I mean, my best guess is maybe on a good day, there's 150 legit TPAs out there in the marketplace. I don't know for sure, but
Right.
I wouldn't be
I would agree.
surprised.
It's somewhere between 150, I'll say maybe around 170. And then when it comes to the
Okay.
MGUs, again, more consolidation there. But the biggest jump, at least the past 5 years, has definitely been the brokerage market. And as well, private equity firms that are coming to the event, brokerage firms, captive firms that are there
Yeah.
now, as
Yeah.
well as all the different cost containment vendors, IT companies, everything from biometric screenings to data analytics. I mean, if there's a way to scrub data, they're at SIIA or they're a member of SIIA. So that's today, right? That's the different world.
Mhm.
Where do you see this industry, as you go into the twilight years of your life, Mike, the retirement years in the next 10,
Yeah,
15?
things are getting dim. That's for sure.
They're not dim, man. You're a good looking guy. You're still young. You still look as good as you did 20 years ago. But what
Well,
does this industry look like 10 years from now? What do you think changes even more? How low
well,
do we go when it comes to TPA count?
that I think we continue to go lower. I think there's, from what I gather from the sort of financial markets, there's still energy for consolidation there. 10 years might be a little bit ambitious crystal ball. One thing I would suggest that we might see more of, and this is something where I think there's going to be more health systems in our space. Historically, and even now, there is this built-in conflict between the self-insured payers and the health systems for all the reasons that your viewers and listeners would easily understand. But on the flip side of the coin, there's more health systems that are looking to engage proactively with self-insured payers through direct contracting arrangements. And I see that as an area actually of greater collaboration going forward, notwithstanding the problems from a kind of a macro sense with, of course, your firm and your clients are very familiar with. But don't be surprised that you see more collaboration, because the health systems, they have their own challenges, and to some extent, the self-insured payers can be useful for them, and in turn, create good scenarios for the plan participants. So that's one area. The other area, I think captives are going to be continue to play an increasingly important role within the self-insurance space to take layers of risk with regard to stop loss insurance. So those are a couple areas, I guess. And the third is, I think we're just going to continue to see a greater influx of technology solutions. I think to some extent, if you kind of walked around the exhibit hall that we recently had there in Phoenix the last couple of days, I mean, there were a lot of companies that are doing really advanced things on the technology side. You mentioned data analytics. That's certainly a big area. You've got the machine learning and artificial intelligence coming in for stop loss underwriting and for the risk takers. So I think that definitely, certainly in 10 years, that you're going to see from a technology, artificial intelligence standpoint. That's what all the smart people are telling. And then I'll add one fourth thing here is just the pace of medical innovation continues, particularly in the area of cell and gene therapy, which is a big ticket item for our marketplace. And I think to run parallel to that, I have a feeling that you're going to see more solutions, technology and otherwise, that are going to pop up from the entrepreneurs in our space to help the payers and the risk takers, partners, to be able to deal with these medical advancements.
It's funny because I was going to bring up a lot of these. You brought up every single thing I was going to bring up. That just tells you how smart I am. That actually I'm on the same page as Mike Ferguson.
Well, I've sat through many of your presentations, so I take notes and use them. I plagiarize them for my own sometimes.
I appreciate that, and so do my listeners. No, but honestly, when you mentioned, the payer systems, the healthcare systems, the hospital systems, there's no question we're seeing more collaboration, more direct contracting, just more, like you said, cohesiveness, because at the end of the day, everyone wants to get paid. Everyone wants to have an opportunity. And there are so many areas of our country where there is competition for the healthcare dollar between various hospitals. So now some hospital systems who feel that they're getting the shaft, let's say, from one network or another, if they see an opportunity to align with a self-insured plan, with a large-scale employer, with a third-party administrator, they're going to take that opportunity where that opportunity might not have existed 10 years ago. And part of the reason why those opportunities exist is because of the new technology of opportunities and advancements that we have, where we actually can use the data and the analytics that are scrubbed from it to see steerage, quality metrics, outcomes, all those things. So all that ties into place. There's no question. So Mike, that was awesome. So I have a separate question. What do you like to do for fun? Now, I do know, folks, Mike is not a born Carolinian. They say, is that the right word? A Carolinian?
South Carolinian?
South
No,
Carolinian, that's right.
I've been here for about 20 years. So
Right?
I'm
But you're a Southern California guy.
California originally, yeah.
I mean, you surfed, right? And I think you played the guitar as well. Is that right?
Surfed a little bit when I was younger. The guitar, actually, that was just a stage photo. So unfortunately, I have no musical talent whatsoever, but I'm pretty much up for sort of anything outdoors, anything beach, water, I'm in. I'm someone that likes lots of different things.
Would it be safe for me to make a prediction that upon retirement, is Southern California in the mix at all? Or is that stage of your life, it's over with, that's done, you're sticking where you are?
It's done. I've got plenty of stuff here in South Carolina that I like to do, and then just at some point being able to travel more and do some things out there. So I'm good, but still quite a bit of runway ahead at this point.
Well, I think one of the coolest things about you is the fact that your wife is from South Africa, and the fact that you get to travel to South Africa so often. What's the big deal? Because I've never been to Africa, but what's the one thing about going to South Africa that's different than here? If you don't mind sharing.
Yeah, well, I'll give you an example here. Like if you go somewhere, like if you go to some national park or whatever, everything's pretty super sanitized and there's guardrails and there's signage and there's here's what you can do and here's what you can't do and you know, lots of people, whatever. There's some places I've been in South Africa where it's basically you're kind of out there. You take your chances out in the wild. Now, that being said, is I don't want you to think when I go there, I'm just sitting in a hut out there.
Definitely made it sound like that.
But we go to the wine country just outside of Cape Town, which is really pretty, super nice. A typical day would be mountain biking in the morning through the wine country and then coming back and getting cleaned up, go to the wineries, just enjoying the landscape and great food, all that good stuff. So lots of stuff to do, but I'd highly recommend people have a chance to go. Look me up. I'll give you what you need to know for that type of trip.
Well, I think it's hilarious, right? That in the one question asked about South Africa, and Pat, my producer, could definitely confirm it on. You've said the word wine at least 6 times. I have a feeling that this is not a sober trip. The word wine, it's literally involved in every activity you do, whether it's mountain biking through the wine country, having a glass of wine at lunch, or going to a winery to have dinner. Everything's basically wine is the constant. Is that correct?
If you like to drink wine, it's a good spot to go. So yes, you picked that up correctly.
Well, folks, that's all the time we have for today. I want to thank Mike Ferguson, the CEO of SIIA. He's a true friend, a longtime colleague. And, you know, I just want to tell you, Mike, that I appreciate the insight and for you being a guest on the Book of Russo. So thank you, buddy.
Thanks, Ed. I'm happy to be here.